How to buy an apartment. If you're tired of monthly rent and plan on staying in your current city for the foreseeable future, you may be ready to take the next steps and buy an apartment. Step 1. Get pre-approved. Knowing what loan amount a bank will approve you for can prevent your imagination from running wild. And if your dream apartment suddenly comes on the market, any offer you make will be taken seriously by the seller. Compared to other types of loans, the paperwork needed to get pre-approved for a mortgage is minimal. If you're denied, take a look at your credit reports and check for any errors that may be lowering your FICO credit scores. You can check all 3 credit reports for free once a year at annualcreditreport.com. Step 2. Calculate what you can afford. While a bank may be willing to give you more than you thought you would be approved for, this doesn't mean you should spend that amount. Determine what you want your payment to be and go from there. Your loan officer will likely provide you with a spreadsheet of loan amounts and their monthly payments, but you can also head over to a mortgage calculator to determine what kind of price range you think you should be in. Step 3. Find a local real estate agent. You want someone who is not only capable of answering all of your questions, but who is also able to share advice that you don't even know you need. This means he or she should be able to easily answer and obtain information on proximity to local schools, crime rate, designated parking, public transportation, utility costs, amenities, monthly WA fee, property taxes. While WA information is one of the most important variables when it comes to buying an apartment, many states restrict what an agent can and cannot discuss with you, because doing so would be akin to practicing law. Step 4. Determine property taxes. Property taxes come with any real estate purchase, and can price you out of certain neighborhoods. The money you pay into escrow account each month is used to pay your property taxes, so there is no need to put anything extra into your savings. However, because your mortgage holder takes care of it, your monthly payments could increase year to year with any change in taxes. When calculating whether you can afford to buy an apartment, divide the total amount the seller pays in property taxes by 12 to determine how it will affect your mortgage payment. Step 5. Make an offer. When you found the special one and have decided on an offer, contact your realtor. If you choose, you can make your offer more appealing by not having an inspection clause, which allows you to walk away if the inspection is horrible. In many situations this is dangerous, but if you're in a competitive market you could consider hiring a contractor to go with you on the initial walkthrough. One thing you don't want to skip out on, however, is an HOA clause that states you can back out of the sale if the WA is not to your liking. Some states require this clause, but it's not universal. After they have received your offer, the buyer may accept, counter, or decline. If time is of the essence, meaning multiple apartments have popped up that you're interested in, you can give them a time limit to get back to you. Step 6. Sign the purchase agreement and make an earnest money deposit. If your offer is accepted, you'll have to make an earnest money deposit, usually 1 to 3% of the purchase price. You'll also have to sign a purchase agreement. Purchase agreements lock both the seller and the buyer into a legally binding contract, and is what prevents both parties from walking away from the sale. Step 7. Research the WA. Apartments typically have an HOA, Homeowners Association, which issue their own rules and regulations for living in the complex. While there are a lot of benefits to HOAs, they come with extra costs separate from mortgage payments. Fortunately, the money is used to help maintain the entire complex. The most important thing to inquire about an HOA is whether or not its financials are in place, particularly whether it has enough money set aside in reserve funds, money for future repairs. If there's not enough, WA fees could increase significantly in the coming years. As discussed, WA research falls under buyer due diligence. Step 8. Get a home inspection and home appraisal. Buyers pay for both the inspection and appraisal. If you back out of the sale because of any information you receive, you won't receive a refund. You can ask the seller to fix any issues that were found, but they may decline. At this point, you can also make a counter offer if you believe the apartment's physical state warrants a lower purchase price. The sale can also be forfeited. Step 9. Choose a loan type and down payment amount. The closer you can get to a 20% down payment, the less time you'll have to pay PMI, Private Mortgage Insurance PMI. For a conventional loan, PMI is often removed automatically once you reach 22%. If you choose to take out an FHA loan, you'll pay MIP for the entire loan term if you make a down payment smaller than 10%. According to Freddie Mac, borrowers pay between $30 to $70 each month for every $100,000 borrowed. Step 10. Choose a home insurance provider. Property insurance covers any loss or damage to your apartment and assets inside your home. Similar to property taxes, the money that you pay into escrow each month will pay for your homeowner's insurance. Your lender may require you to purchase extra coverage, such as flood insurance, if the apartment is in a high-risk area. You must purchase homeowner's insurance before closing. In fact, your loan officer may require proof of insurance weeks before closing. Step 11. Do a final walkthrough. If you requested any repairs, this is your chance to verify they were done. And if it was agreed that any additional appliances would be left, such as window AC units, you'll need to see they were, in fact, left behind. Step 12. Close. You'll need to do a bank transfer or get a cashier's check to cover your down payment and closing costs. The full amount needed will be disclosed to you by your lender. Closing is usually pretty fast, but be prepared to sign and initial many documents.